G'day guys, it's Kyle Marshall here. This video presentation is to help you understand the process and systems you need to follow to help you unlock the equity from your property portfolio. Why it's important to understand this is that as a seasonal investor, you need to be able to obtain that additional equity to help you raise funds for deposits and costs. It's a really good way of building up your property portfolio instead of having to save your hard-earned cash in doing so. Alright, so there's 3 steps that you can look at releasing the equity to help you duplicate the process. So the first stage of looking at releasing the equity out of your own property portfolio is looking at going to your same lender and doing what we call an equity release. Okay, this equity release is basically the most simple and cost-effective way of releasing the equity out of your property portfolio without having to pay bucket loads of mortgage insurance. Alright, still, it's like a full application you need to put together. The first thing you really need to identify is what the value is of the property. Once the banks confirm the value, it's within the realistic expectation of what you are after, then you have to submit your full financial applications. They attach a separate loan facility for you or a top-up against your loan, and away you go, there's your deposits and costs. The second option you have, if your current lender is not willing to assist you, is you can look at refinancing. Okay, so what do I mean by refinancing? It's you going to a totally different lender to help you release the equity out of your own property portfolio. When it comes to refinancing, there's some things that you really need to consider. This comes down to the costs. When you refinance and you're going over 80% LVR, alright, you're going to have what we call lender's mortgage insurance payable. Alright, this can be anywhere from 2, maybe 2.5% of the loan, so you really need to weigh up what is the equity I'm looking at making out of the refinance, what are the costs involved in doing so, and is that going to help me achieve my goals. So make sure you look at the numbers to see or work out if this is going to be financially viable for you. Now the third option you can look at when it comes to releasing equity. As a property investor, we may not like it, but sometimes when our borrowing or our servicing capacity has reached its limit with the banks, we may need to look at selling off the asset. Alright? Things, again, you need to consider. It could be anything from what are the sales costs associated with it, is there any capital gains tax that you need to pay, but at the end of the day, what are you going to be left over after you pay down the debt to help you increase your property portfolio? So again, guys, look at the numbers. We don't necessarily want to sell because the asset is going to continue to grow in value, but you may need to consider these options if you can't do the equity release or refinance. Okay? So again, before we go out there and look at any forms of equity release, we really need to identify what the value is of our property. Alright? There's a few tools out there that you can use to really help you understand what the market is doing in your particular area. Some basic websites a lot of us are used to using when it comes to finding property is you've got realestate.com, you've got the likes of domain.com, you've also got a tool out there called Price Finder. This will help you find properties in your area that have sold within the last 3, 6 or 12 months. Alright? But the most important one you really need to understand is the ones that the actual banks use, which is RP data. Okay? Some of these tools can be free, some of these may have a monthly or yearly subscription. So you really need to look at it, fine-tuning the data and seeing what your property is really worth based on the comparable sales. So when it comes to identifying the value of your property, there's 2 different ways that people perceive the value of our investment portfolio. There's the market value, what a buyer is willing to pay for your property, but then what we've got to consider is what are the banks going to value it for us. Remember, the banks are always looking, or these valuers are always looking in the past, where we as investors are always looking at the opportunity and the value. So when you're looking at doing an equity release, don't necessarily look at what the market's doing. You've got to do your research and find out what the banks are actually valuing these properties. This is where you get a true indication of what equity you can get when it comes to equity release or refinance. When it comes to the market value and you're looking at selling, this is where you may get a higher than expected price regarding a bank valuation. Right, now we're looking at a bank valuation. We really need to look at the comparable sales that banks are going to use. For us as investors, we need to go and do our research and find at least 3 to 5 comparable sales within a selling period of the last 3 to 6 months. All right, this is the guidelines. The value is used for the banks in seeing how quickly they can sell your property based on the market and so forth. So guys, as an investor, you've got to go out there, find 3 to 5 comparable sales within the last 3 to 6 months. Without this, how can you get a true indication that the bank's going to value your property? All right. One word of warning as well, even though you may find 3 to 5 comparable sales, but if you see 20 out of those 5 are selling a lot lower, just make sure you understand or manage your expectations of what you think that property is going to be valued by the banks. So let's do the research, find the comparables, make sure it's within the last 3 to 6 months. That's the information now we're going to take to the banks to get a proper valuation done. Alright guys, we've done all the research now regarding the comparable sales. We have a really good indication what our property is going to be worth. Before we go putting any finance applications in, there's 2 very important things you need to do first before applying for finance. Because when we go applying for finance, every time we do, we have an active CRA go on our credit file. Alright, so every time we seek for credit, someone's looking at our credit file and seeing how many times we are actively seeking for credit. This could damage your credit file. So the 2 things you need to go back to your finance broker to look at before you're lodging an application. Right, so the first thing you need to ask your broker is making sure that you have the ability to service that new loan that you're trying to acquire. Remember, servicing is based on your income expenses. So you take the comparable sales, you update your property finance summary, send it to your finance broker and tell them what you're trying to achieve. All right, make sure the data is accurate. So remember, servicing is based on the income and your expenses to work out what disposable cash flow is left over for you to use. All right. So when you're doing this, remember, you could be borrowing an extra $30,000 to $100,000. You want to make sure you actually service that loan without any other additional properties, rental incomes coming into play. All right, so it's very important. Check off your servicing, make sure it can work before you progress to the next stage. All right, guys, the second thing you need to check on when it comes to finance ready is making sure that you fit the credit or bank's policy. All right. There's been a few challenges in the past when you're trying to do equity releases. A lot of banks may only let you take out $50,000. When you're looking at taking in a lot more equity, they're not necessarily going to let you have direct access to it straight away. So you've got to double check with your finance broker regarding your existing lender, or if you're refinancing, are the banks going to give it to you straight away, or do you need to show a contract for your next purchase to make sure you've got the funds available? All right, so guys, these are the 2 most important things you need to do as your due diligence before you go out there applying for finance. All right, guys, you've ticked off all the bank's criteria with your broker. The last thing that you really need to be looking at is making sure that you now do a formal application. Even though it's only an equity release or potentially refinance, the process is exactly the same. It's still the same documentation you need. The pay slips, the ID, the tax returns, the loan statements. Anything that the banks need, you need to provide them to make sure you can get this equity release out. All right? So make sure you get all the documentation done, give it to your broker. The first thing, again, you've already done is ticked off the criteria. Order a valuation up front with that funder. Once that valuation has been confirmed and it's within the guidelines you're after, as soon as you submit the formal application, you should have an answer back between anywhere from 4 to 10 business days, guaranteeing you what sort of equity you're going to release. Alright guys, you've submitted your formal application to the bank. They've come back and given you a formal approval outlining to you the following: what sort of loan you're getting, the interest rate, what are the costs associated with that setup. Remember, with the equity release, you could possibly have a lot more LMI applicable. But if you're going out there to look at a full refinance, there's going to be a lot more costs associated. So when you get that formal approval, you make sure you understand the costs, what is the reward or the equity release we are getting to help us with our next purchase. All right, if the reward's a lot greater than the costs, For example, you've got an extra $20, $30 or $40,000 that's come out, that there is enough is for another 5 or 10% deposit on a property. Alright, so use this as a guide, make sure you've ticked off your costs, what are you getting out to help you duplicate the process. Alright guys, you've finally got your equity out, you know exactly what sort of dollar figure you've got. So the next thing, last thing, you're equity ready, you're going to go out there to your coach and work out one of two things. What is the serviceability for your next deal? And then also based on your amount of funds, what is your buying power? Okay, so make sure you tick off your servicing and your buying power to confirm how much you got ready to go into the market to go out there and building your property portfolio. So again guys, thank you very much for your time. Hopefully this video presentation helped you understand how to unlock the equity to help you duplicate the process. Have a good day, bye for now.